Welcome, friends. Today we are going to talk about one private company stock, and this stock is nothing but a banking stock, which is one of the favorite among the retail investors. Most of the retail investors have invested in that stock, and we are going to talk about IDFC First Bank. You know that IDFC First Bank is been invested by most of the investors. Why? Because the value was quite lower side. That was around 40, 50 when most of the investors started investing, and the prospects are good. But however, this stock has gone up to, you can say 100. Now it has fallen almost 20, 25%. It is around currently at 78 level. And many of the investors like Vivek Rakha, B. Lakshmi Nayan, and Lucas Joseph have asked this question, what to do with the IDFC First Bank? The stock is not moving. The stock has a great future. I know everyone is talking about, but it is not moving and why it is falling. So today we are going to talk in depth about this stock and we'll do the fundamental analysis. Also, I'll tell you what to do from here. So, guys, if you are new to this channel, do subscribe to this channel. Guys, my name is C.A. Tapandoshi. I am also SEBI registered research analyst. If you want any stock to be analyzed from my side, put it in the comment box. We'll try to cover next time. So let us talk about IDFC First Bank. Let us talk about now how the stock has performed in recent time. If you talk about this stock, guys, if you see the in last 5 years, if I take, the stock has gone to almost in 2020 to 18 rupees. Okay, and this stock has a grew, then gone up, then again gone down. Almost July 22, it was around 30, but then it has gone almost three times in next almost you can say 1 year. It has gone to almost 99 rupees and it has now fallen almost around 78. Now talking about this stock, as I told you, many investors invested. So why the stock is falling, let us talk about that in detail and we'll also understand the quarterly review. So let us understand the basically outlook and how was the result and everything. So talking about that now, IDFC delivered a mixed quarter, was a miss in earning because there was a high provision. Again, improvement in margins sequentially, that is going to happen. Again, deposit transition remain robust while CASA mix improved sequentially, defying the systematic trend. So CASA धीरे धीरे बढ़ रहा है. Of course, we are going to talk with other, going to compare with other banks. That will give you a much better understanding. ROE is at around 1.16%, guys. Any ROE which is above 1.5%, it is very good. It's very good. Currently, they are targeting to reach at that level because currently they have a high OPEX. That is why their ROE is on a lower side. Again, cost to income ratio is actually there on the higher side, around 74%, which is on a higher side. Earlier they guided about 65%. Now that is cost to income ratio. जब आपका cost ज़्यादा होता है income के ज़्यादा, that is where the analysts are skeptical. And that is mainly due to they need to have deposit mobilization at a healthy run rate and continue investment in business technologies and branches. See, IDFC has a legacy of a infrastructure lender. Now they want to go to a, you can say that no CASA, that is current account, saving account. They want to go at that level, and that's why they want. There is a transition phase, and in this transition phase, the cost to income ratio is remaining on the higher side. Again, margin is going to remain stable. Again, steady loan growth. Again, there will be a deposit. See, they are providing loan, no deposit at around 6.5 to 7%, which is on a higher side, but they need that deposit more so that their relevance on the infrastructure, bonds, and all that will go down. So that is where there is always a high cost borrowing. Now, let me compare with the other companies to show you much more in detail about how this company is performing against the other banks and everything. So if you talk about cost to income ratio, as I told you, if I compare IDFC First Bank, is around 73%. If you see DCB Bank, it is 64, UCO Bank 60, Federal Bank, it is 51. I've taken mid cap, small cap only. But when we compare the, you can say cost to income ratio is 73, 74%, which is where the analyst having a problem. और उनका ज़्यादा ही रहता है क्योंकि they are putting lot of efforts in getting more and more deposit. So agar if you talk about the CASA ratio, you can see here, guys, this chart, what it shows from 2016, it was almost 0.7. It has gone to almost now 46.8. So current account, seeing account, IDFC Bank, it's gone to almost 46.8. Phenomenal growth in CASA ratio they are having. last few years. In UCO, if you talk about it, 37, Federal 30%, DCB 26. So you can see such a big transition IDFC First Bank has done, and they are bringing out current account, saving account. That is a very, very big positive sign. And that is why you can see in last 1 year also, now the stock has given a very good rally. Now, when we talk about the net NPA is okay only. अगर आप देखोगे, it is 0.68 compared to DCB is 1.2, UCO Bank 0.98, and Federal is 0.60. So 0.68 is okay, but they are going to bring down that also in future. Okay, so let us see the what the company is guiding for next 3 to 5 years. They're given a guidance 2.0. So let us talk about that. All this thing is very important when you are going to invest in any company, guys, or any bank. आपको फ्यूचर प्रोस्पेक्ट्स पता होना चाहिए और कंपनी क्या अचीव करना चाहते हैं. देयर एमडी इज क्वाइट फेमस, विजय विजय सदन. दे नो, ही इज अ quite a famous guy, and he has done a great job. Earlier he was a CMD of Capital First. He brought it from loss to profitability. This is what now he is driving IDFC First Bank also. So when we talk about that guidance, talking about that guidance 2.0, so if you see the IDFC annual guidance 2.0, under which it targets 24.8 CAGR in deposit and 30%, 20% growth in loans in next 5 years. So 25% growth in deposit and 20% growth in loan, and they have to do it because they want to bring their basically reliability on the infrastructure bond. They want to more rely now on CASA. Again, the bank has guided 1.9 to 2.0 ROA and 17 to 18% ROE for the next 5 years. Now, this is where they are targeting. Currently, it is on a lower side. It is around 1.19 ROA, but they are going to target a 1.9. And if they are able to achieve, then that is very good for the company. And 17, 18 ROE is also very good. Again, they are guiding gross NPA, net NPA of 1.5% to zero point 0.4 by 2029. It is currently around 0.68%, which I already shown you. Now they are guiding to zero point 0.4, which is on a lower side. So that is a good. Slowly and gradually, they are bringing the net NPA also. Again, they are consistently, they are expecting a growth of 20% profitability, around 120 billion to 130 billion by 2039. So on that also, they are thinking that yes, they will have a good growth from here. If you talk in next 5 years, the bank is expected to have almost 1700 to 1800 branches. Currently, I think they have around 700 to 800 branches. So in next 5 years also, they are planning big to bring many more branches to increase their scale and they increase the influence across India. Now, when we talk about the various ratios currently, what is having, no, if you see, as I told you, the gross NPA is around 2.1 and net NPA is 0.68, something around. They are going to bring it to zero point 0.4, which is a good part. So slowly and gradually, if you see over the years, earlier it used to be in 2021 gross NPA 0.4, 0.32, it has gone to 2.1. Even net NPA from 1.9, it has gone to 0.6. So they have reduced a lot. Even slippage ratio from 6, they have reduced it to 3.2. Okay, now if you talk about cost to income ratio, earlier in financial year 19 it was 145. Slowly and gradually they are trying to bring it to slowly, but they are not able to bring it. This is where the analysts are having a concern, but hopefully they'll try to bring it below 65. Currently, it is 72, 73. When we talk about the ROE, it is currently 10.5. They are going to increase it to almost 17 to 18, which is a very, very good level. ROA, as I told you, 1.19. They are going targeting 1.9 to 2. That is also a good one. Again, price to book value is around 1.92, which is a reasonable level because normally you give premium if a company is doing well, if a bank is doing well. So that is reasonably there. EPS growth is okay only, not so great. Okay, अगर आप देखोगे EPS growth was almost 19% this time. That is okay. In next few years, it may accelerate as they increase their branches, as they increase their CASA ratio and all that. That will directly impact the profitability. So that is what is looking currently. Now talking about this valuation, you may be thinking then Tapan, what to do? Shall we buy this stock or what should we do? So when we compare with other banks and everything, The price to book value of IDFC Bank is 2 compared to other like HDFC Bank and ICICI and all that. They're having 3.5, 3 and all that, which is reasonably well. अगर आप देखोगे, overall the sales growth is okay. Overall, the profit growth is also 42%. Even if we talk about the quarterly result and all that, it is stable only from last few quarters. Okay, year on year, of course, it has given a massive jump. You can see it was earlier March 20, it was minus 2,800 crore, which has gone positive, and March 20, it was almost 2,400. Now it is almost 3,000 crore rupees in last 12 months. So that is where the profitability is coming into picture. Even if you talk about the sales growth is 37%, profit growth is 50% in last 12 months. In last 3 years also, the profit growth was 42%. In 1 year, the price has gone up. The If you talk about stock price, has gone up 41%. It was much more. Now it has gone down, and around 3 years, it is around 8% only. So looking at the, you may be thinking then what to do. My suggestion will be, guys, understand this stock is overall okay only. ऐसा कुछ नहीं कि stock में कोई problem. But the main thing is, the overall the market has fallen. The bank nifty has fallen. I'm talking about bank nifty especially because the HDFC bank has not performed. Most of the, you can say that, no, banking stock has fallen. Now because the banking stock has fallen, along with that IDFC First Bank has fallen. Again, some of the reason why it has not done well, because of, as I told you, that cost to income ratio is on a coming on a higher side and all that. That is what the analyst does not like. But when you see the 5 year guidance, the guidance look much more robust. Again, the IDFC First Bank MD is quite famous. You know, the way he has turned around the Capital First Bank. Similarly, expectation is much more that in IDFC First Bank also they'll do. So at this level, at 78 and all that level, no, if you are a long-term investor, if you think that yes, IDFC First Bank story is intact and it will do well, I think you can think about it. Because see, at the end of the day, most of the thing depends on the what is the future prospects. And for IDFC banks, how they are able to convert into retail bank much more no smoothly. And again, you know, the merger issues and all that, you already know that they want to transfer from infrastructure banking lending to basically retail bank lending. And hopefully, if they are able to, the way they have given the guidance and all that, the way they are able to control, if they are able to control all this stuff, and they are able to achieve things, I think things are will be much better from IDFC First Bank. But yes, initially, if you see the current scenario, short term scenario, I think that depends on how the banks are doing, how the bank nifty is doing. But once the interest rate cut happening and all that stuff happening, I think things will be much better. So as a retail investor, you can think like this. You can, if you want, you can stay invested and slowly and gradually increase the exposure, provided you believe in the IDFC First Bank story, which I already given to you. So guys, hope you like this video. Hope you got lot of learning out of it. What learning you got it, you can put it in the comment box. Again, if you want any of the stocks to be analyzed, put it in the comment box. No, we'll try to cover next time. So do like, share this video to everyone, and do subscribe to your channel. And me, Siyata Pandoshi, signing off, and I'll see you soon in the next video. Bye bye.